Perfect. Well, hello everybody. My name is Gabrielle Inzerillo, and I'm a financial regulator here at ADGM. We have actually heard a lot about regulation, and not from me, but from different people from this ecosystem. So that's been very interesting, especially considering being here within ADGM. There's definitely a lot of willingness and want to develop the things that enhance business, notably frameworks and different types of regulation. Now, unfortunately, Monel Issa, who is the CEO of Vanguard Finance, could not make it. Her flight got canceled, so we are all very sad to not have her here. However, I'm sure she'll be around at a later date. So if you did want to meet her at some point, please do reach out. But I have my wonderful panelists. So Jean Herel from CrunchDAO. So you can say hello.
Hi, hello Gabriel, hello everyone. Thank you so much for being here. Should I present a little bit CrunchDAO or should we?
Yeah, go ahead and then I'll get on to Gary.
Okay, hello everyone. So I am co-founder and chief information officer at CrunchDAO, and CrunchDAO is a community of machine learning engineers and researchers. We have 5,000 researchers around the world, 600 PhD, and we use smart contract to allow financial institutions to leverage AI and use AI in their operation by getting in touch with our community. And we've been joining Up 71 2 weeks ago, and it's an absolute delight to be here in Abu Dhabi. Thank you, Gabriel.
Thank you. So you're fresh.
Yes.
Gary, you're a little less fresh. So
Less fresh.
Gary Schenkman, partner at Further Ventures.
Yeah, well, welcome to our humble village by the sea.
Thank you.
Hi, everyone. Gary, one of the partners at Further Ventures. We are an ADQ-backed venture builder. We focus primarily on building out next-generation markets infrastructure. So some of that means fintech companies. Some of that means digital asset infrastructure, including broker-dealer, custodian, on-off ramp, staking, and insurance products. We're based right here in Abu Dhabi, have 5 companies up and running, and hope we have a chance to speak at some point in time.
Well, we've been notified that we actually have a good 40 minutes with you today. So you'll have ample opportunity to talk. And also, if someone does want to scream, questions at the end, I won't say no. But, organizers might have issues. All right. So we are here to talk about the wonderful world of smart contracts, right? And how they apply to asset management. So far, we've been told that they can, leverage, it's better for operational efficiency. It lowers costs. It can, be a way of democratizing access to asset management, which is known to be quite expensive. My question to either of you, and you can just jump on it, is if it's not broke, why fix it? Where do smart contracts fit?
Well, it's not broken, I agree, but there is always a way. There is always ways for improvement, right? And I guess there is probably many asset managers here, and you guys know that there is work that needs to be done. And even from the point of view of our fiduciary duty of asset managers, you have this obligation toward your customer, right, to do what's in their best interest, right? So when there is technologies like smart contracts that can enhance transparency, which mean enhancing risk management, which can lower the cost of transaction, all this added value will then ripple on your customer. So there is, I think, a duty to study those technology and really try to push them forward.
Yeah, I think we all get very spoiled with beautiful interfaces, be it with fund administrators or newer banks that are out there. But if we kind of peel back and open up the hood, it's all a bit of spaghetti with a whole bunch of 80s technology, right? And so while I don't believe that we'll democratize access to products, I think every new development in technology is a way to save costs and to dump on retail. We will have material efficiencies to gain, right? Today everything from fund administration to capital call management to reporting to audit is an extraordinarily painful and expensive process for all sorts of asset management firms. And so as we get better primitives and higher quality databases and better contract execution, we'll be able to work in kind of more interesting endemic ways, I think. But more importantly, I think the barrier to creating higher quality products is going to drop.
Okay, but very honestly, what does it actually mean? integrating a smart contract at any point, let's say, of the asset management, journey, whether it is executing on contracts, as you said, or removing an intermediary. What does it concretely mean? How does it actually make things cheaper or make life easier?
Take that one, or?
Well, you actually replace some intermediaries with the smart contract. So what you are going to do is use this piece of code to actually replace an intermediary. So this piece of code will be operating in a completely transparent way because smart contracts are hosted on chain, so they are public data. So for you as asset manager or for an asset issuer, it will be the opportunity to host data within this smart contract as well to have more transparent product and more transparent transactions, more transparent market making, more transparent settlements of some transaction, because those smart contracts will be public and completely transparent. And the goal in the end is replacing intermediary, which will lower the costs and enhance transparency.
I mean, if you think about, again, in more normal or day-to-day or traditional asset management, just how much paperwork and humans it requires to do a capital call or to place funds into escrow or to keep regulatory capital in a way that's, transparent to the people that actually care, be it stakeholders or various other, people in the ecosystem that might want to check if you actually have, the funds on hand that you're supposed to. So there's a lot of manual work that currently goes into this world that can just go away. And that makes working with intermediaries and other stakeholders much easier, because all of a sudden you remove a lot of that human friction. And hey, if I want to integrate, with your market maker or with your other, data provider, all of a sudden I just need to come up with my side of it. And I know, hey, there's an oracle here that is providing me with correct data. I don't really have to worry about, is this a properly registered firm? Have they completed their audit? All of these questions just go away.
Okay, very interesting. However, keep in mind this is nonetheless a multi-billion-dollar industry. Lots of jobs, lots of capital, lots of people relying on it. And I guess, as you mentioned, it relies on numerous intermediaries, which are, in one way or another, they are part of the whole process of checks and balances and controls that are put in place. Now, can we actually trust smart contracts to execute as we expect them to? I mean, can we trust the code?
So that's the beauty of it. It's not about trusting the code, it's about seeing the code first. So that's the first advantage. You will see what will be executed. It's not like you will have a contract with a software provider that is actually hosting his piece of software on his own server that is audited on his side, right? Here you will be able to actually see what will be executed. So this transparency is very important here. And then I think my second point will be that you don't trust, you anticipate. Okay. And nothing is 100% secure. There is always the chance that a system could be exploited. And if you look at the budget, even in traditional finance, UBS is spending around $500 million Swiss francs every year only on security spending. So they are custodian of trillions of assets, right? So they have this fiduciary duty of making sure that their systems are secure, and you will have always people that will spend days and years trying to hack a system. And if you want to do not be hacked, you need to attract the security researcher and the community toward your protocols. And the incentives needs to be relevant when you think that UBS is spending $500 million Swiss franc every year to solve this problem. The guy that can enter the system, they are smart and they know the relevance of your incentive. So if you want to educate and have those people come toward this technology and make it safer, you need to put the right incentives. And I think it's very important to always remember that no system are perfectly safe. You can buy the most secure car, you can buy the last Volkswagen, right? And it can still break somehow. So I think it's important to keep that in mind.
In terms of kind of the companies providing the checks and balances, I mean, most of them can burn to the ground. I mean, in general, right? If you're talking about audit, fund administration, a whole bunch of accounting, half of the legal work that your law firm charges you for. This is rent extraction. These are high margin processes for shuffling paperwork. No actual value happens. No one is reading these contracts. I've never had a piece of code or a software issue me the wrong number of shares. In a
Right,
new
but it
corporation.
allows the firm to point the finger when something goes wrong, right? So
Sure.
where do you point the finger with the smart contract in that case?
So I think that what will end up happening is that, and this is a little bit pessimistic, there will be a long transition where consulting companies will stop selling ERP software and they will lead you on your digital transformation to smart contracts, right? And so we will always need some sort of an audit process for the smart contracts, and we'll all pay for that as an industry, and hopefully at some point in time that will become automated. And so just the auditing of the contracts themselves, that's something that code will be able to do itself, right? Right now, Chat GPT, sure, can give you a very, very basic site, but very, very quickly you can start to ask questions whether this smart contract, for example, has errors or not. Even today, if you're signed up for Chat GPT 4, you can have it write up a very basic smart contract, at least in EVM, and it works. It won't be good just yet. It won't be efficient. But the fact that you can do this for $20 a month is pretty impressive. And that means that in a couple of years, we'll be pretty production grade with this stuff.
Yeah. So to answer your question, where to look, and this is a fundamental of blockchain, which are hosting the smart contract. It's the concept of redundancy of the information. And you find also this aspect in avionics, for example, critical systems where you will have 3, 4, 5 sensors that are doing the same thing. And what the blockchain is doing is basically providing this redundancy because the information is hosted in many places to avoid this single point of failure issue, which is very problematic when you rely on one provider for this piece of data, one provider for this settlement. Then when this single point of failure is breaking, the overall system can break. Thanks to redundancy, you have this copy of the information everywhere that you can double check. You can perform averages between the different providers. And this is very easily enabled. It's actually built into blockchain and smart contract. It's built around this redundancy, which is a very strong safeguardian for both cybersecurities and data issues that you can face in financial markets.
I want to jump back to something you mentioned. When we were talking about auditing, you talked about the right incentives, right? To actually see if there's any, failure points. You also mentioned bug bounty. You mentioned having, the need for a community that would be looking at this code or even looking at problems in general. Does this mean that you think that a good audited contract or a good smart contract should be fully transparent so that the community can go in and, I guess, press against it, push against, see what's attacked?
Yes, exactly. I think, and that's well known in the cybersecurity community. You need to engage and be proactive and kind of provoke the issue as soon as possible, right? And provoke as many issues as possible. So instead of having big earthquake, you have these smaller perturbations that are easier to handle, right? Now, regarding your second point, sorry, that was about? I just forgot.
Well, that is my problem. I do ask multiple questions in one go. I think it was about whether you thought that contracts had to be fully transparent so that the community could try to push their luck and see failure points.
There is this one particularity of smart contract that they are transparent. So if your business depends on IP, if your business depends on trade secret or it depends on something that you cannot share, right? It's your competitive advantage, then you cannot put it on a smart contract, right? Okay. And this is what the industry is currently facing now, is that you will have to use encryption scheme to be able to put this IP inside the contract, put these models on the contract, etc. And this is very challenging. There is some field like homomorphic encryption that are moving forward, but they are not yet here.
They're not quite ready.
Yes.
I think one of the things that's important to think about is we look at kind of the crypto technology in the traditional finance space as like, oh, why doesn't do XYZ yet? Or when will this be available? It's kind of like it's a dead horse and you keep kicking it. It's like, come on, do something. And at the end of the day, each cycle brings us very interesting new primitives. So, if we were having this conversation, 5+ years ago, cool, we have some layer one developments. We now have tokens that allow us to basically, request that a blockchain stores or processes some data. Wow, pretty big innovation. Distributed database that doesn't need an intermediary. Really cool. The next thing that happened were, the ERC20 tokens on Ethereum, which is like all the ICO booms and scams and some non-scams that happened over that cycle. But that was quite interesting. That was using a blockchain to issue another denominated piece of value. Pretty interesting innovation. We couldn't do a whole lot with it. The next cycle, we had ERC 712 and 1155. Again, I'm just going to talk about Ethereum, but a lot of other L1 chains have similar primitives. And this basically said, cool, there's an ID, and to that ID, we can attach metadata. That could be a visual asset, that could be any kind of other information that we choose to attach to this token. And so here, we have the NFT boom, but what's interesting is that that could be anything. That could be a share certificate, that could be titles, diamond certificates, whatever it is. But still, we need more. And so the latest innovation this year is account abstraction. And so now we're getting into things that are actually useful for real world asset management. So for example, I can now have a wallet or a set of wallets in a portfolio that's owned by a group of people or programs that I can then transport to other ownership. And that becomes very interesting for keyman clauses. That becomes interesting for delegation of authority. That becomes very interesting for all of these other things that we actually legally need in the asset management business in order to do our day-to-day work. And so, the industry is quite young, but just the toys to play with are all very, very new. We're probably going to have a conversation, next year on the same stage about some new primitive that came out, and that enabled all sorts of new stuff to happen. I think any smart wallet, any wallet company that you are talking to these days is probably talking about smart wallets and account abstracted wallets. Why? Because now you can actually subsidize gas fees and do social account recovery. This is all new stuff. I mean, imagine a bank, saying, "Hey, you need to have a completely separate account every time you need to send money. We can't actually do that automatically for you." And so we're getting to a point where we're finally matching, the retail capabilities to what we actually need.
Stay with me, Gary. You're backed by big money, big Abu Dhabi money.
Small checks, big dreams.
The small check screening. Okay, but nonetheless, Further Ventures is backed by ADQ, which is an important sovereign wealth fund within the UAE ecosystem, right? Which means that in a way, they're actually an asset manager themselves. And also, you have access to many, many big, large asset managers and corporations. So, how do you see larger entities interacting with these types of innovation? Is it just more, kind of a bottom-up situation, or is there real investment at the top coming down?
So I think
Because right now I'm seeing big investments through you down, going to go back up. What's the situation?
I mean, I think there's always the large announcements that have large organizations, corporations all over the world are kind of pushing whatever next generation technology, blah 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 blah. But the reality is that to move, I think, the industry forward, it's death by a thousand cuts. So for us, it's our half dozen of companies that we launched so far, making progress on moving capital around and custodying it. It might be another half dozen companies by another Mubadala or ADQ backed organization that is also hacking at the same problem. I wouldn't want to be in a position where we're the only kind of homegrown custodian solution or the only homegrown broker dealer that's operating here, and then everyone else is kind of trying to fly in and get regulated. We want as many market participants as possible because that will result in cross trade between our various organizations. So you have to build the guts first. That's kind of the answer to your question. Ish.
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 Ish. I'm not super satisfied with that, but
Okay.
it's
Well,
fine. I won't
what
pick on
details
you.
can I add?
No, it's fine. Let's see what Jean has to say because I mean, you yourself, you're the founder of a startup, right? So you've had to, get investments. You're also connected to the ecosystem. You're trying to convince people. as well. How do you see big entities actually integrating this stuff, if at all, in a meaningful way?
Well, I think large entity needs to always keep the entrepreneurial mindset, which is quite difficult. And there is many ways. We have been collaborating with the Idea Lab during the last 6 months, for example. So we had
That is a big asset manager indeed.
we had our community, the 6,000 member of our community, to work on their data to try to improve their internal modeling capabilities. And we organize this around a hackathon. So that's one way. It's very simple. You just organize a competition and you can interact with startup, interact with the communities easier. You can do innovation labs. You can do sandbox, which is actually what you are also doing at the DGM. So I think there is plenty of avenue to do that, and I feel it was possible here because the regulators, I think, the mindset of the regulator in Abu Dhabi is turned toward innovation, and not so much toward regulation, which is more the case in Europe, right? And these have been very supportive for us to be able to collaborate with these entities.
Thank you. I'll take that as a compliment.
It is.
I mean, you don't really have much choice where you are to say anything else but nice things. But if we can just jump back to some of the benefits of smart contract integration into asset management, we say that it's going to democratize access. Is this something that's going to happen straight away, or is this something that you see at more in the 5-year term when these big institutions actually take it on?
So I don't know if we'll disagree or not. So I think it democratizes it for professional advisors, but not necessarily for retail. And so by that, I mean, when you want to list a new product as an asset manager, you need to go through your own compliance mechanisms to make sure that it is okay to make that product available to your clients. And then there's the entire onboarding process, again, between yourselves, the administrators, the exchanges, the custodians, and kind of all the participants required to make this work. The idea here is that in the near future, you can go and build a regulated fund on chain and have it be fully audited. And then I can ship that fund to your custodian or to your application or to the platform that you use to manage your clients or family offices. And this stuff isn't science fiction. There's a number of companies that are going through the application with the FSRA right now that are going to make this stuff live and possible now. I mean, that's how I personally don't hold any dollars. All of my money is on chain. And I do it through one of these regulated products. It's in a real fund. It's SPIC insured, and it works. So we're in a place where the stuff is significantly closer than you think it is.
Really? Okay. Very interesting. Jean, any?
Well, I tend to agree with Gary.
We wanted a fight.
Well, okay. There is maybe one area where you have very low. You have these assets that have high barrier to entry, right? Because purchasing the overall asset is pretty expensive. And fractionalization of this asset can be made in a pretty cheap way thanks to smart contracts. So if you can fractionalize this asset and you can break it down to the much smaller unit of value, then this will allow a retail investor to access this safe investment without having to face this high entry price, right? And if these assets are regulated, of course, and if they are liquid, I think that could be a great opportunity to access, let's say, buying a piece of art or a piece of real estate or investing in that kind of asset. So that in that case, I see some
That's a good
some
point.
possible future.
Actually, let me just jump in because you're from France, right?
Mm-hmm.
And I remember there was in the last few years, there's this big waves of tokenized or fractionalized real estate for small investors. But then I think they found out in the last the last year that all the intermediary costs and management costs basically ate away at all of retail's, increments or profit. So what you're saying is that if we had, instead of having those actively managed real estate portfolios and we had completely, tokenized it, put it in a smart contract, then those amounts would not have been eaten away?
Yes, you could have the asset issuer directly exchanging with the future asset owner. That could be the asset manager or or the retails if he's buying himself. But so if you remove all this intermediary, then the friction of cutting this asset in smaller unit of value, which is very expensive, right? At the moment, is possible.
Huh. I like that. That's good.
I mean, the other thing that's interesting is if you're buying a kind of more complicated product. So let's say you are investing in a hedge fund, or you have a specific strategy that you have deployed to, and usually mean your fund administrator, or if you're an LP, just the GPs will be sending you a report. Hey, we rebalanced, the portfolio this way. And you trust those reports, and they're very long, and you have it's Apex Clearing or whatever that's sending you the actual trade confirmations. What if you could actually monitor your portfolios and funds trading activity as it was happening? Because it's no longer happening through a GP, a clearinghouse, a trade execution piece of software and set of vendors, but all of this is integrated. And there's a certain beauty to that, because now you know exactly what's happening inside of your portfolio at any given time.
So does that mean that you expect there to be a brand new business that's going to be built on top of this in order to monitor these for people? Because I can, for instance, the average person, or even myself, I can't read what's happening through my smart contract, even if I had money in it. So would there be are you saying that there's new businesses that are going to be created that's going to create a layer on top of that so that people can understand what is happening in real time?
Yes, and old businesses that don't die will convert to doing it. And so
Okay.
today, right? And so today we're already, if you're on the vendor side of this world, right? If you are powering exchanges or platforms or wallets, you're already purchasing Chainalysis and Elliptic and Merkle Science and a lot of these tool sets that allow you to visualize what's actually happening with your transactions and try to attach that activity to the real world, to real humans, to real legal entities. I think that there will be a lot of other interface created in order to facilitate, reading, just what is happening, with this stuff. By the way, if a smart contract is well written, it should be human readable. So if it's not well written, then it probably won't be. But it should be very logical.
Good point. Actually, that's very, very good due diligence advice. Now, I wanted to go in to talk a little bit about regulation, what you expect from your regulators and such, but also because I know a lot of people have been talking about regulation in the last few sessions. I'm not sure if I'm allowed, but I was wondering if maybe anybody had any questions. We can do one or two and then go back to the regulatory aspect. If anybody has any.
Only
You-
softball questions, please. For me, he can get the challenging ones.
Oh, just if there isn't any, that's fine. I'm not going to put anyone on the spot. No. Oh, is there one? No?
Mic runner?
Oh,
Someone run with the mic.
I'll come. Don't worry. I am a facilitator, so I will come to you with my mic.
Hi. How you think asset management DeFi will be, and what problem to stop be bigger for these products?
I didn't fully get the question.
I didn't fully understand your question. So in terms of large asset managers, what
What's
problem they
problem?
might- I mean, for some of the larger asset managers, is that if they want to really move a chunk of their portfolio over, they might break crypto. The market caps of some of the assets that they manage are significantly bigger than the industry, and so we have to be mindful about doing this sequentially. I think that there will be a lot of pilot programs starting out. And we won't see a wholesale movement. You're not going to hear, announcements unless they're going to surprise us. I don't know if, Adia moving all of their products on chain next year. That would be immensely cool. I think it will take quite a lot of experimentation, and we shouldn't expect this stuff to happen overnight. We'll be talking about this forever, right? I mean, if you think about it, people have been talking about market enabling infrastructure since there are markets, and we've moved from paper contracts to digital shares to, kind of all the tool sets that we have today. This is a better, mousetrap. but it's going to take us a little bit of time to build it. And so I think we're not going to see a wholesale movement, but it'll generally be in step functions.
I'm also going to add something. I know I'm not the star here, but I also want to give more of a regulatory perspective to that. Evidently, being an EDGM within the FSRA, we have a lot of fund managers, a lot of asset managers that come to the center, right? And there has been, exploration, somewhat experimentation. But right now, the way the regimes are set out, it's all functional, which is why my first question was, if it's not broken, why fix it? So evidently these sort of changes are going to take time because they also need regulatory approval as we look at ways to audit these smart contracts ourselves and also enable more real-time monitoring.
Yes, and if I may add something on your point, Gabriel, I think it's these technologies are complex and they open countless new avenues to engage in transaction and to create new business models. So they are interestingly complex, and I think the regulator is making this decision of incorporating also more technical skills, which is very important to really understand this tech before it gets completely regulated. And if the regulator cannot incorporate these skills by keeping the proximity with the innovator, with the startups, I think it's a good way to get a grasp on the tech and really understand what's happening and being able to keep up with the pace of innovation in the field that is really fast.
Amazing. So I think I've gotten a sign from from our boss saying that we can actually, that it's time for us to go. No? Or is it a question? Oh, yay! Go ahead.
So I wanted to ask that with the current market run since the 1.5 last year, and with the FTX crash and everything, what are your views on complete decentralization? Because I don't think it actually exists.
Well,
Nice.
I think that's this point is arguable. I think human tends to overreact often, right? And being a decentralization maximalist is not, I think, the good direction. It's better to be pragmatic about what level of decentralization we need, where does it add value, and where it actually destroys value. So it's not a black and white, and I totally agree. Full decentralization is sometimes not an option. And there is aspect about that where you want to keep, sometimes intermediaries are good, sometimes slowing down the transaction can be very important in terms, there is, for example, flash crashes that happen, and having this system that can stay a bit slow and maybe even have humans sometimes to be safe guardian of this mechanism is very important.
The vast majority, kind of asymptotic to 100% of problems that we found in this industry stopped at decentralization when an organization just went like this to what's happening on the blockchain and just made up numbers and put it on an application. And that really has kind of nothing to do with the fundamental infrastructure work that's happening, on the asset management level. And I think every time we hear a big court case, I'm like, fantastic, this is great. FTX was an incredible event because it finally forced investors, funds, and retail to start thinking about insured and regulated custody. Let's talk about proper on and off ramps. Let's not just send our earned money or our LP's money to a random bank account in the Bahamas, not in the name of the company where we're supposed to be trading. So I think all of these cases are very, very positive outcomes for the long term. So I would say that's a bullish sign for me.
Yes, I agree. And so these are the exogenous forces that can actually create a crisis. And in complex system theory, I don't know if you heard about the French School of Econophysics, and Didier Sornet is talking about these exogenous criteria that can create this crisis. So sometimes the crisis comes from the system. It's not something coming from outside, like FTX or this kind of thing. This, you cannot really cope with it. This will happen. COVID-19, tsunami, these kind of things will happen and may break the system. Now, if it's coming from inside the system, transparency is interesting because you can run modelization, you can run tests, you can run Monte Carlo analysis, millions of tests, trying to find the tail events that may have break the system. So in decentralization, you have before decentralization the smart contracts that are completely transparent that will allow this simulation of tail event scenario. Now, removing also this intermediary will accelerate the speed of the system. If you accelerate the speed of the system, a small perturbation can create a catastrophe at the end, because there is a cascade event that can then ripple, and all the market actors that are automated are reacting super fast, and there is no slow down possible. And maybe I think that could be a part of the regulator.
You're saying if things go too quickly and
Yes.
something happens,
Yeah.
it can get blown out of proportion.
Yes,
Right?
and something pretty banal, a banal fact in complex system can create the perturbation that can create in
It's the
end-
butterfly.
Yeah, exactly. So this could happen, but having this slowdown in the system is a way to all this, like I was talking, this replicability of data, that we be able to make sure that this data was not problematic, was not wrong. And because if you have single point of failure, you have this wrong data entering the system, it can ripple in a complete catastrophe way.
Awesome. Oh, sir, you are going to be our last question, by the way. Just closing it down. It's raise your hand. Right here, it's you.
We're getting the red flag. They're getting the Rotten Tomatoes ready for us.
Oh no.
Thank you. Well, I'll just continue playing devil's advocate and ask you, how do you reconcile DeFi's intrinsically permissionless nature with the need to license and regulate?
Oh, that's a good question. So, can I start this one?
Please.
Even though
I'm
technically
actually
you're the-
curious as to what guidance you will give us.
Well. So I think right now we're in an active phase of learning, right? We have to go around working with a number of DeFi firms to see exactly how they function and ultimately who is the authorized person, right? So normally you give a license to a person, they become the authorized person, they have their internal checks and balances, they have their own internal frameworks and guidance that they then feed back to us, that we, say this feeds to our rules. Now, at what point, if it's no longer an authorized person and it becomes this decentralized method of code that's passing along, who do we authorize? Who do we license? Do we license the code? Do we license the developer that's building this, even though they're not the person actually actioning it with them? These are all questions that we are actually actively looking at. Though I cannot answer exactly what our thinking is right now, because our consultation paper is coming out in 2 months, we do ask that everybody who's interested in this question, you included, because you wanted some guidance, please do answer us when we put that out, because these are questions we are all asking, right?
I mean, on a practical level, I think that you guys will end up as a regulator as a much more active monitoring organization as opposed to kind of an audit and licensing organization. At the end of the day, crypto will get a lot of flack for sanctions avoidance and money laundering and all this fun stuff, but it is exceptionally difficult to do it at any meaningful scale in DeFi because every transaction is trackable, and humans can't, but certainly software can track basically every dollar. There's a very good reason why, if you go and talk to the chain analysis folks, they'll tell you that even the more advanced mixers that are available to anonymize your transactions aren't all that anonymous anymore. And the amount of work that has been done to pair your online and digital quote unquote Web2 behavior to kind of probabilistically guess, who are you in Web3, the work that's there is quite advanced. And there's a number of firms that are, selling to governments and anti-terrorist and anti-money laundering organizations all around the world today. So the technology is there. It's a matter of implementing it in a way that allows firms to integrate via API, for example, to a regulator so that we can be proactive, as a community to deal with this stuff.
Amazing. We're going to wrap this session up, but I'm going to give the opportunity to Jean to give us our closing remarks. Anything you'd like to tell the audience?
Well, first and foremost, welcome to Abu Dhabi for some of you that are landing tonight. I hope you're going to have a great salon. Feel free to come and talk to us. It's amazing to be able to talk about this. We are at the forefront with decentralization. We are at the forefront of smart contract, and being in Abu Dhabi is really an opportunity, as we have great regulators, supportive of innovation. This is the capital of capital. So in terms of asset management, this is definitely a place to be. And well, I hope you will enjoy your stay.
Love it.
Have a good one,
so
guys.
much.